Interest rates are likely to plateau. Oh shit, I wish I knew about this before I bought the property. New South Wales, Victoria, Sydney and Melbourne are going to be your best bet. 2023 was crazy. We've seen multiple interest rate hikes. We've seen the residential property market being super resilient, and we've seen investors continue to flock to Queensland and Western Australia. My team and I have been asked multiple questions throughout 2023, and here are the top 10 questions which I'd like to share with you in this video. Question number one is, what's happening with interest rates? Well, I'm not an economist, so I'm not here to tell you what will or might not happen with the interest rates. However, I do understand that interest rates are affecting many families across Australia. I've seen a lot of families starting to struggle financially, and I understand that is a big topic that's on top of mind with every Australian family. When it relates to commercial property, what we have seen is that investors continue to look for high yielding properties, particularly in regional areas. And we can see that yield and cash flow have been a priority from a lot of our investors. Now, what's going to happen with interest rates in 2024? I don't know is a short answer. However, if you're reading some of the recent articles that's been published, and here's one, and here's another one, they're all saying that interest rates are likely to plateau in 2024. So what does that mean for us, commercial property buyers? What it means is that it is potentially a great time to buy in 2024. Because as we know, when interest rates plateau and eventually start to drop, property prices go up. So right now, 2024, a lot of investors are feeling the pain and they're forced to sell their property, or they're forced to do something with their portfolio. So as a savvy investor, if you're cashed up, you're ready to buy, now is a really good opportunity to get some good bargains. Question number two, how much capital do you need to start investing in commercial property? There's no one size fits all answer, because it really comes down to each individual's goals and financial capacity. But what I can say is that I've always recommended buying commercial properties over $1 million, because you have less competition and you can find better opportunities. So let's say you go for a minimum $1 million property, you typically need 30 to 35% deposit plus purchasing costs like stamp duty, legal, etc. So most likely you need a minimum of $350,000 to $400,000 capital to start investing in commercial property. Now, having said that, the sweet spot in getting good value-add commercial properties are between $2 million and $15 million. So if you have a few $1 million that you can tap into, you can potentially get some great value-add opportunities. Question number three, what are the lending options and criteria? Well, generally speaking, you need 30 to 35% deposit for a commercial property. So unless you've got $4 million in the bank, you probably will need the bank to lend you some money. There are still the traditional full doc loans out there, but what's really unique and special about commercial properties is you can apply for a lease doc loan. A lease doc loan is like a silver bullet for investors who need cash. And with a lease doc loan, you can go straight to the bank and say, I want 70% for this property. How a lease doc loan works is you don't need to provide any financial statements. The bank will assess the property's merit based on the lease that's already in place. So if you already have a tenant in this particular property, the banks will just focus on the lease, the rental income, to determine the borrowing capacity for that asset. That's why you see sophisticated commercial property investors go from one property to the next, because they don't have a borrowing capacity issue, because they use the lease doc loan. Question number four, what is the best asset type to buy? Well, the beauty about commercial properties is there's so many to choose from. You can buy student accommodation, you can buy car parks, you can buy office, you can buy warehouses, you can buy shops, and everything else in between. However, not all asset classes perform the same. So you really need to understand how each individual asset class works. My personal favorite right now are industrial properties, cold storage facilities, neighborhood shopping centers, and mixed-use properties. Why? Well, if you look at the JLL report right here, and also the CBRE report right here, they're saying that industrial properties and cold storage facilities will continue to outperform many other asset classes in Australia. But in saying that, my personal view is that there's a place for investors to buy neighborhood shopping centers. And I'm talking about little shopping centers with maybe an IGA, a medical center, a news agency, something small, not the big end of town. Because those neighborhood shopping centers typically have a captured audience, and most of the time they're COVID proof. So they're really good assets to get into. And then finally, I really like mixed use properties. And what I mean by that is potentially a warehouse and an office together, or maybe a showroom and a warehouse, or maybe a shop and a residence on top. The reason why I like mixed use is because it diversifies your income, and also it typically allows you the better development potential in the future. So those are my picks, but like I said, there are so many to choose from. Choose the one that you like the best. If you're getting value so far, don't forget to click the like button. Now you might have guessed, question number 5 is, where are the best places to buy? It really comes down to what you're looking for. Are you chasing yield and cash flow? Are you chasing capital growth? Or are you chasing development upside potentials? Each particular pocket across Australia performs differently. What I will say though is that in 2023, we've seen a lot of investors flock to Queensland and Western Australia because there's a lot of opportunity and these places are looking like they're about to boom. But don't discount places like Victoria and New South Wales, because if you're after capital growth, New South Wales, Victoria, Sydney and Melbourne are going to be your best bet. However, if you're chasing cash flow, high yield, Queensland, Western Australia is probably my pick right now. And in terms of affordability, you may want to consider South Australia, Adelaide, and Perth, Western Australia. Question number 6, should I invest in regional areas or should I stick with capital cities? Now that's a great question. In my experience, some regional areas have outperformed capital cities. However, it comes down to your risk appetite and your financial goals. If you are considering investing in regional areas, here are my 3 rules for investing in regional areas. Number 1, invest in areas with a minimum population size of 100,000 people. Rule number 2, make sure you're investing in an area where there's not a single economy. For example, a mining town or an area that heavily relies on tourism. You want diversification of economy. And rule number 3, this is an option. Preferably you want to invest in a gateway town, places like Tamworth or Albury, because those areas will always be in high demand. Question number 7, so what's the biggest risk for a commercial property and how can you mitigate the risk? In my opinion, the biggest risk is prolonged vacancy. With commercial property, it's not unusual to have the property vacant for 3, 6, 9, in some cases, 12 months. So unless you have a very strong balance sheet that you can ride out the vacancy, it could be a very risky venture for you. So how can we mitigate this risk? Here's a few tips. Number 1, buy properties that have multiple tenancies. So for example, maybe you buy a row of shops where there's 5 tenants so that you have diversification of income. Number 2, make sure you look after the property. Don't let the property go to shit, because you want to have a property where the tenants are proud to be in. And tip number 3, start the lease renewal discussion early. So you give the tenant and yourself enough time to talk about lease renewal and how you can help them stay in the property, unless there's a strategic disadvantage in engaging with the tenant early. Question number 8, how do I find value add opportunities? Well, the truth is, it really comes down to network and relationships. With commercial properties, 50% of properties sold are usually sold off the market. So unless you have good connections, good networks with agents and property owners, you'll probably miss out on these opportunities. Thankfully, being in the industry for over 23 years, I've developed some pretty strong network and relationships. The other thing that really helps me identify value-add opportunities is really understanding the market dynamics and also consider outside-the-box solutions to properties. Sometimes there's potential in a property where others have missed. Unless you understand the market dynamics and you can think outside the box, you would also miss out on the potential as well. And finally, I have a full-time dedicated acquisitions team that analyzes over 100 commercial properties every single week. So that's how I'm able to find value-add opportunities. And question number 9, how can I do my due diligence properly? what is the ideal due diligence framework? Now, before I get started, I did make a video about how to do due diligence properly so that you'll never have to buy a problem again. I'll add a link right here so you can check it out. But generally speaking, unless you're doing your due diligence properly, you can potentially be buying a problem. How many times have you heard someone say, oh shit, I wish I knew about this before I bought the property. Now it's gonna cost me an extra $200,000 to fix. You don't want to put yourself in that position. So make sure before you sign the contract or before the contract goes unconditional, you check out my video so that you understand the 5 steps to an ideal watertight due diligence framework. And question number 10, do I offer a commercial property investment course? Well, I'm glad you asked, because I'm really excited to announce this right here. In 2024, I will be launching Property Lines Academy. This is designed to help property investors get into commercial properties and also scale their investment portfolio. The first 50 people who registers their interest will get a massive discount and bonus when the course is released. So click the link below, leave your details, and look out for the announcement. If this video helped you as a property investor, then subscribe for more videos.